Okay, officially, good morning. Happy Tuesday. Welcome to the Market Watch Group Monday Market Kickoff. We took yesterday off for Memorial Day. We're back. Market's loving the weekend tariff news. So yeah, let's go take a look. First and foremost, as always, let me remind you, everything we do is for education and illustrative purposes only. Nothing we do should be intended or construed as a recommendation to buy or sell any financial security or product because we're not brokers, we're not advisors, yada, 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 yada. The rest of it's there, you can see. What's our agenda today? Let's look at the opening futures and what is the news that is driving it and any other news that may be coming out today. Let's review the economic calendar and the posture we derived on Sunday. Held up. No concerns at all. It didn't jump. It's not like it jumped and we predicted that there would be a jump. That's not how market posture works. Mindset for open trades. So I'm pretty sure most people still were carrying a little bit. But I think there was also some hedging. So hopefully some of the hedges got booked. And I will say this. The more bullish the market, the quicker I'm going to take a piece of hedge off. Right? So if I'm hedging a market that's showing strong recovery, I'm not going to be like, yeah, this thing is, it's not be like it's looking good, but I still think I'm going to hedge. With that in mind, that strong recovery means it's increasingly likely to not have a sustained pullback. It could. But I want to make sure that the way that I manage my hedge definitely directly is impacted by my market posture. There you go. Bob Walker said it. He said the futures are up over 1%. Yeah, the market's loving it. And like I said, we didn't predict that this was going to be a 1% bullish opening morning. We just said we're still bullish. We're bullish from the momentum. We're now what we would consider slightly bullish empirically from the score. And we said we like everything that we see. Everything's looking pretty good. As such, right, anything you carried, I believe some would still have some like IBM left. What are some other trades people still have on? I know there's pieces here and there. We'll go through the whole watch list, but mindset there is great. Still pushing. CME still have some on. Yeah. So there's some things still on. We still have some. We're dying to put some new trades on. This is not going to help us there. And I'm not going to put on a continuation trade based on tariff news. That's for sure. If it keeps running, I'll have something on, and then I'm going to wait for the next pullback. That's my thought. Give me yours. Okay, and we'll talk about trading plan section of the week. We're working on trading plan rules. Great Did you see the post or the email? I mean, we have like 28 stocks on the opportunity list. There was comment after comment like, yeah, our list seems like Fantasy Island. It's like all these great. Well, yeah, that's the point. We don't build like a mini replica of the S&P where there's some bullish, some sideways, some down, and we're plod through it all. Find the best, put it on our watch list. That's what we're looking to trade. So, okay, let's hit it. Let's hit it. Let's start with orienting ourselves around what's going on. So there's what Bob Walker was talking about. S&P up 1.24. Dow up 1.11. NASDAQ 1.38%. And this is before You can see what's the big news. Well, you see the guy, with his black leather jacket. Huang, is that his name? Huang, I think it is. He's got more money than I do. I don't know about the rest of you. So NVIDIA is reporting this week. So we have some tariff reprieve here. Then we have Apple facing pain as the iPhone tariff. They're like, can you put a tariff on one product, let alone one company? He's like, I am going to tariff iPhones. Not the iPads. They're fine. Watches are fine. The phones. That'd be funny. Okay. What else? That's really about it. Capital goods orders tumble in April. I'm going to be honest with you. I'm not an economist, you guys. There are still plenty of times where I'm like, is that bad? What does that mean? I'll click that later and read it. I don't obviously think that's impacting the market as we look at the futures. So they're looking at something. The market's looking at something else. Okay. What are we looking at this week? There's the durable goods orders. Well, see, that's the problem. That's the problem. This is a perfect representation. That's a good thought. Press overbought in March and then underbought in April, right? Because they bought more than they needed. But what I would say is this. If you were to come in and only look at the news and you're like, and you see, where was that? Why can't I see where I was just looking? Anyway. Here it is. Capital goods tumble. Oh, that's a strong word, tumble. That's so negative. But when you look at the calendar, previous was 7.6 and 6.3, a minus 6.3 from a 7.6 is a tumble. But the problem is the forecast was minus 7.8. So expectations had already been set. Yeah, it's going to be pretty nasty. And in fact, it was less nasty than expectations were set. That's why the news can be so difficult sometimes, right? Consumer confidence will come out right as we wrap things up today. So we'll see what happens there. Tomorrow, we've got a little bit of Fed with Neil Kashkari, of course. He's in Tokyo. No one cares. A little bit of Fed with the minutes of May's meeting, where we get a little insight into the discussion. Thursday, GDP revision, nothing expected there, but we do have jobless claims. We're just going to continue. We have a very specific process we use to orient around the labor market. We're not going to ever get distracted by, people running around screaming about things that they notice. One thing I want to flag, there was that employment index, the SAM, I can't remember now. And they're like, 9 out of 8 or 9 out of 9 times, like whatever it was, 8 times, 9 times out of however many times, 100% of the time. Oh, that's going to trigger, I can't even remember when that was. Was that more than a year ago, you guys? Who was even here for that? Do you guys remember that? And we're like, oh, that does sound ominous. And then we looked into it. And, this was deviating from our normal labor market routine. We looked in and we're like, you know what? This doesn't really actually play out. We're going to stop paying attention. The market kept talking about it. Nothing happened. Nothing happened. Yeah? So there we go. Not too worried about that. That's exactly right. Press remembers that too. The female economists who actually was the one who published it came out and was like, yeah, it's really a very different, because we were at all time, like literally coming. They're like, if you're, the measurement was if it's 12 months or if it's a certain amount higher over 12 months. I can't remember exactly what triggered it, but this time was coming off of all-time unemployment lows, like all-time lows, 3.7% or something like that. So it's like, are we sure this is like meaningful? Anyway. Okay. And then Friday's the big one for us, you guys. We're leading to that. Income, spending, and we've got this wackadoo of PCE. That's the big one. That's the one we're watching for. Expectations are in. So the forecast is that income will drop, spending will drop. The PCE expected to go up one tick year over year, down one tick. Core PCE up one tick, core PCE flat. If we get that, I don't think that's enough for the Fed to consider anything. That's not the first month of 2 months dropping, in my opinion. So if we get that, we need June to drop, July to drop, and then September, the Fed can cut some rates. That's it for me. That's the path. Let me know if you agree, disagree, but that's where I stand on that. If we get a surprise here, then yeah, surprise drop in May, and then we get another in June, then July's on the table for a Fed cut. Absolutely. So if this is a surprise drop in any of these metrics, not a drop meaning it met expectations, a surprise drop. Because if it meets expectations, I just don't think it's enough. And if it's a surprise uptick, then I think the market's going to start pricing in additional, lowered expectations for the cut. And there it is. Let's go look at what's cracking. Look at Uber. Uber was new. Someone gave it to us on, who was that? Bob Rowland? Bob Walker? Someone gave it to us. But gapped up and then sold off. Let's go look at the SPY. Okay, so, I mean, look, this is the kind of thing that we're hoping for. Consolidation. Buyers. Buyers. You can see down here, that's giving us. So this is the kind of thing that we think, as we had an enormous opportunity list, the largest we've seen, that could be an indicator, quite honestly. How many stocks, if we went back each week and we counted how many stocks are on the opportunity list, that would correlate directly to market posture. Market posture is 5 or 6, or if the market posture is improving. So you have to go back to a time like October 2023, coming out of a correction. Same thing. You would have seen the market posture at like a 1 or a 2, but maybe a 3 or 4, but it was only coming off of like a minus 0.5. It didn't dip as much as ours did this time. So, yeah, I'd say to be expected. So what do we got? Well, if you missed yesterday, go watch the recording. Long-term stayed the same. Short-term stayed the same. Volume actually decreased a little bit. And that doesn't mean that the sellers showed more than the buyers. It means that the buyers showed less of an advantage over the sellers. Still an advantage. That's why it's still a 0.5, but less of an advantage. So that one dropped a little bit, but the major market rose by 1/4 point. That's positive now. I want you to notice now that we're positive, +1, positive, 0, positive. No more negatives. Last week we got rid of our last negative. That was here. So you can kind of see how this thing has shifted. So here we are now maintaining our 2.5. With what? Well, I mean, if the market turns up, that's going to be a higher low. That's going to give us another score. Probably on both long-term and short-term. So that's right. As the market posture score improves, the volume score is likely to continue dropping to 0. That's how it works. The volume tends to swell on the transitions, and then it tends to ease up. That's why it's helpful to us, because then when it swells again, we're like, whoa, something's happening. Sector stayed the same. VIX stayed the same. I'm still a little bit wondering if I have the VIX underscored right now. I'm like, should it be a little higher? If yours is a little higher and you're like, I don't know, Scott's is lower than mine. Should mine be lower? No, don't do that, because I'm wondering if mine should be higher. So there you go. Okay, but at the end of the day, 2.5. What have we said? We've said what this means to us is that the institutions have shaken off. Not all, but most of that. Could it ramp back up? Of course it could. We know that. We're not naive to what the variables at play are. But what we're saying is that the institutions who have the money, and they definitely have that money ready to go, are seeing it stronger, and therefore so are we. Okay. Questions about that? Let me know. It seemed to be a pretty tight range. No one really jumped out with like what? You guys are 2.5? I'm a 4. There wasn't any of that. I don't think anyone's that bullish. And at the same time, nobody was like, you guys are a 2.5? I'm only a 0. I really see this thing more neutral. So yeah, we've got a lot of smart people in the room trying to be as objective as we can, and we're in good alignment. And I would say that it's kind of what we've hung our hat on in navigating this market over the last 4 months, is just fluidity with changing conditions. Be water, my friends. Okay, let's hit the watch list. You guys are quiet today, though. Everyone feeling all right? Did you eat too much barbecue yesterday? We had tri-tip, and my wife made a chimichurri. So good. Smoked tri-tip with a reverse sear. Did the reverse sear on the Blackstone. It was pretty good. Pretty good. Recovery mode. Walker's a little sore from yard work, which means he did his. If you looked outside and saw my long grass, you'd be like, Scott needs to get outside today. Okay. Too much bourbon for Gami. Gene's recovering. Love it. Understood and accepted. Apple, let's start there. It's turning, but is it, it held these lows, this support level technically held. You're more in a channel than a trend on Apple right now. So if you're like, hey, but isn't it bouncing? Maybe, but we have 28 stocks. That's not one of them. So be careful not to fall in love too quickly as you move through your watch list. AbbVie is on the list as a potential hiccup trade. You can kind of see up, down, and now starting to turn up, which would mean this would be our point of orientation. I would definitely be looking for at least this. That's 15 right there. Yeah, AbbVie. Amazon. Now here's the thing, you guys. That's not the type of candle that a lot of people like buying on. They're like, but the candle's red, Scott. It's red, but it's up 1%. Now, we're 11 minutes into the market. Are our signals valid at 11 minutes into the market? Absolutely not. Absolutely not. Right? We watch the first 20, then we wait to see. Could you start getting some valid signals in the morning? Yeah. Yeah. If you switched your chart, I think you could. Are you going to have better chance, especially when you see a gap like today? Probably wait until the afternoon to make sure this holds up. Yeah, probably. That's my thought. But Amazon, it's on the list. Looks pretty good. What else? APH. Now, APH. Goodness, look at that. Look at that. So you can see here it's coming down, gap down, came up. It did technically engulf. That would not have been, if you're like, did we miss the signal, Scott? No. This is what it looked like, right? Now, here's the thing. Sometimes when you isolate, you're like, look, it crossed. It crossed after. This is what we could see right here. Still coming down. So, no, we didn't miss a signal, but certainly it's turning, and it could be a good potential. Why can't I see this? I would not, on a trade like this, have a stop down underneath this at this point. I think you'd be able to get a closer. 84.80. So you're what? 3 points on the stop. If you think you can get 6 to 9, then you've got a 2 to 3 to 1 on a continuation trade. Yeah, Friday was interesting, right? It gapped down and then engulfed. Absolutely, you're right. Bank of America, interesting because it's trying to turn, but it is a red candle. Now, I like other things better. I like Morgan Stanley because that's where we just had a really strong trade. And I like going back to the well. I just drank that water. It was fantastic. It's cold. It's clear. It's magnificent water. Let's go get some. That's my thought. That's why I lean towards MS. But there's other opportunities in there. We'll see others. Caterpillar. There's industrials. We like industrials. These are viable if they hold up. It's not viable at 744 or 944 or wherever you are. Sienna on the list. This one was not CME. Oh, come on, CME. We carried a piece just for this. Everything else is going up and you're not. 644 where press is. It's early. Okay, CME. We see that you're not maybe gonna do much more. So what does that tell us? It tells me I carried it. I cost myself some time hoping to catch some bullishness. I saw bullishness on the market. This didn't get any. We're probably done here. Take the rest. It's a little less than it was on Friday. Still a great gain. That's now. I'm going to watch this too, because if at the end of the day this thing pushes back up towards the highs, then I'll give it another day. So, but that's what I'm thinking. Anybody else still carrying it? You guys are so quiet. I feel like I'm monologuing today. Is anybody else carrying any of their CME? Let me know. I'm very close to the end there. CNP is not on my list. El Jago says yes. Cisco is for a new entry. It's looking interesting. Yes to Kevin, no to Miguel, no to Bob Walker. Gene closed his. Holding until later today. I agree. I mean, we held it to here. We don't be like, I didn't do anything 9 minutes in. Let's go. Yeah, I agree. Let's see if it can catch a little rally. But if no, I'm done. I'm done here. I said good day, sir. Delta looking interesting, though. A lot of things look interesting, though. Not EA. I'm done with EA. EA, you're kicked off the island. No, I got to get it back. It's just like, how are we going to get it back if it just looks like, if this doesn't do anything? You feel what I'm saying? Like, I feel a beautiful, I'm going to establish that we can revenge trade. Everyone's like, don't revenge trade. Oh. Come on. If you want a revenge trade, go into it eyes wide open. So, 107 on CME. Nice work, Bob Walker. So, my thought for EA is, okay, I'll keep watching it. I've got to plan this better. I need to not just come and react. We're going to spend some time maybe tonight on EA planning a revenge trade just for fun. It'll just be a good exercise, a working trade exercise. Flex on the list, looking viable. I mean, honestly, you guys, if it looks like this at the end of the day, it's probably going to be alert, maybe two. We have to decide like how much capital and where and how many trades and what kind of diversification. GE Vernova. Oh, you son of a gun. Press is giving me good advice. Press is going to give me really good advice, which I'm going to choose to ignore. He's like, look how many, Scott, 28. Is EA on the list? No. Are you spending any energy on it? Yes. Yes, I am. Okay, fine, Press. Let me ruminate a little on GE Vernova and how many times I was like, oh, I think we should. Nope, we can't. Oh, I want to. Oh, I can't. You could just feel it building somehow. And this just was like, bam. I don't know if you got some guidance from Glenn on gold Monday, but this is the kind of thing I'm not a big fan of if I'm in it. So I would not have stopped out, but I would certainly be working my way out now. And gold could be immediately moving into a dip. I don't disagree with that. Google is on the list. Goldman is on the list. Look at that. If that look okay, I'm skipping straight ahead. Oh, looky. Just right on our line. It's just like, hey, dear Scott, I've missed you. I feel like you should trade me again. Love, Morgan Stanley. That's how I envision the letter coming into me. I skipped ahead. Let me go back. Hilton. Oh, that looks great too. Hilton and Delta coming out of consumer discretionary. Robinhood. Howmet. That's another one of those engulfing. That sucker's a runner. Here's one we're still in. Or no, that's not in. I was IBM. Thinking of getting in. Sorry. Thinking of getting in. You know what? I it's pinching, but not. I'm going to give that one more room. That's not going to be on today's. I'm going to give that more room. IWM, MasterCard. Ooh, MasterCard and Visa are probably looking good. Meta. Honestly, you could probably. There's MasterCard, Microsoft, Netflix, Turning, NVIDIA. Palantir. There's a lot. That one's not. PayPal. Oh man, Roblox is not going to give another opportunity. It's just going to keep running. Rivian's close. Oh, what happened here? Gapped up and engulfed. Don't love that. Rocket Lab. It's a big old gap. Not much we can do with that. RTX. Yeah. Really refine it and find the best entries, right? The ones you really, really like out of this. TPR is interesting. Tesla is popping, even though sales were down 50% in Europe. TSM. Twilio. Uber. Visa. Oh, look at Visa is looking pretty good too. What is the VIX doing here? Oh, look at that. If it looks like this at the end of the day, I'm putting trades on, but it's not the full signal yet. We need to get below this low, 1983. If we get a little bit more and this takes out this low, that's like the confirmed lower high. I would maybe even look at more than a couple trades. Looks like it could be one big window. Let's finish at Walmart. Okay. We've been getting increasingly bullish. We've recognized and acknowledged all of the accomplishments that buyers and bulls have done. We have increasingly traded bullishly ourselves. Now we maintained posture. This is showing up after some consolidation. How's everybody feeling? The window is between today and Friday's reporting blitz. The blitz could be an accelerant, or it could be a retardant to whatever we get for the next 4 days. I agree with that, press. And it may be that's all we get, right? Pretty good. Ready. Oh, that's a great word. Bob Walker says good. Gene threw a beautiful word out there. Ready. Ready I like because I feel like ready is in the vein of control. I'm in control. I'm right? Doesn't matter what the market does. I'm ready to do what I do. A+. Pretty good. Feel good. I feel good. Twilio RTX. Okay. Yeah. No. I mean, I feel like I'll tell you this. I feel like I worked hard to be patient. Anybody else? As you look back and reflect now, and maybe we're not done. Maybe we dip. Maybe we have another big nasty dip. Who knows? But for now, I worked hard to be patient, to the point that there was at one point where I'm like, did I not push hard enough when I should have pushed harder? Which, if you're ever going to make a mistake, it's better to push not hard enough than push too hard. If there's ever going to be air on one side or the other, in my opinion. Miguel says, I'm still holding my head. So I'm still feeling a bit of like it hasn't. And that's valid, because for me now, I would say this. What would trigger me to close the final trigger would be a lower high, a confirmed lower high. So if we get that confirmed lower high today, be very careful not to let that one drag on. Okay. It's a good meeting today. Let me bring up the trading plan. There was a good chat on that yesterday. I believe. Oh gosh, look at the Fireflies notes. I'm gonna stop letting Fireflies come in, because the only action item is me planning a revenge trade for EA as a trading exercise. Oh, that's horrible. I'm so embarrassed. Hang my head in shame. Come on, Fireflies. There was way more. I literally talked about like 15 clean setups and it flags me for that. Fireflies. Good chat in yesterday's recording about this. And the main point was the vast majority of our alerts would come from what I would call a bounce system. Meaning what? Bouncing off support if we're bullish, or bouncing off resistance if we're bearish. And in order to do those things, we would have to have an established trend. So you can see how that in and of itself starts to create the mechanisms, right, that we need, where it's like, well, if it's a bounce, well, then I can, what am I going to buy or sell? Bullish things. That's the requirement. It's got to be bullish. Time frames. Are these bounces intraday? Are they weekly? Are they daily? Right? So you're going to have your what, your whens, your how much, then all your whys. Why are you buying now? There's some where's. Where's your stop? Where's your target? Then there's the hows. How are you going to take it off? And how are you going to... That's all what you're developing in here. One full set of rules per system. What do other systems maybe contain? Bounces, breakouts, continuations. Those to me are the three core categories. Now, there are a lot of different systems people build using specific indicators, right? Where they're like, this is a moving average crossover system. Those are very unique and very, very technical. So, if you did one of those, you would still do this. You would still have the exact rules. Everything needs to be defined. I've had a difficult time delineating the difference between a bounce and a breakout trade. So, the core thing would be, I'll try to break it down real quickly, right? The bounce trade is going to have that kind of a setup, where the breakout trade is going to be something more like this, right? Where it's like, it's in this consolidation and you're kind of thinking to yourself, you know what, now that it's hit this for the third time, if it breaks out here, that's the entry. You're not really thinking like this is part of the swing anymore. This is a reset, so you don't care. And you're thinking that this is going to come over here now and then get started again. That's a breakout trade, which means your stop would be below the broken level, and you don't really care about this low over here at all. Whereas the bounce trade, you're waiting for the pullback and then the first move back the other way, which means this is support, and you're looking for this to get to the next resistance up here. So you're theoretically trying to get, still these favorable reward to risk ratios out of this, but different types of like what's going on and what's going to trigger me to get in. I don't know, press. Hopefully that helps. I'll tell you this. I tend not to trade breakouts. I just find that a lot of times they just sort of peter out and they don't do that. And then when they come back, they test this, then it becomes a bounce. And then I get the trade I want anyway. So, and then sometimes it doesn't and I just miss it. Missed opportunity. That's fine. There's plenty of opportunity. I never cry over missed opportunity. So there you go. That's the quick 2-minute bounce versus break, and how we want to try to make these rules to, subtly find the right opportunities. It's good to see everybody. I'll be back tonight. Glenn will be here tonight. Glenn's first. What time does he come on? 7:30 p.m. Eastern time, 45 minutes. Take a 15-minute break. I'll be on at 8:30 p.m. Let's search a little bit. Let's build a revenge trade because I don't want fireflies to make me out to be a liar. So, see you guys in a bit. As always, happy trading.